Okay, we just got Case-Shiller data through April. And what April really means is that it's February, March, April data averaged. So it's really old. Like the market has been changing super fast, and this is going to catch up. This is just going to be catching the February, March, April part of the market. But nevertheless, the changes are pretty shocking. Who knows what they're going to be like when they get the current data. Okay, Phoenix for gosh, almost 3 years was the fastest increasing, and this is real inflation adjusted 12-month price changes. So in Phoenix, they've only gone up 20% in 12 months, at least through April 2022. Uh, but Miami and Tampa are now growing faster than Phoenix. Interesting thing here is the house momentum. House price momentum is how fast prices increased the last 12 months versus the 12 months before that. And you can see that for Cleveland, Minneapolis, New York, Washington, D.C., and Boston, basically the last 12 months, they haven't increased any more than did the previous 12 months. These are the cities that have set records at least since January 2016 to the latest data. Which cities, which metros have increased the most? So you can see that Los Angeles, Dallas, Miami, Atlanta, Tampa, and Charlotte have increased more the last 12 months than they have at any 12-month period since June 2016. So they're the hottest ones, at least through April data. Here, I'll take the Case-Shiller data and take it all the way back where I used the base as being January 1990. And so from January 1990, of the metros that Case-Shiller covers, the one that's increased the most is Seattle. It's up. The house price index is 6 times higher now than it was in January 1990. To get an idea of the affordability, the blue line here is the 30-year fixed rate mortgage interest rate. See, it's skyrocketing lately. And what does that mean? So if you put $1,000 down for principal and interest payments and mortgage, how much can you borrow with that? Right now it's 170. At the peak it was 250 almost. Yeah, wow. So that's why prices are tanking. Now that's a 30-year mortgage interest rate, but investors are going to be, they're not getting mortgages. Well, they can get mortgages, so to speak, or other financing, but nevertheless, that'll reflect that kind of payments they have to pay as well. Another thing that changes a lot is the amount of money they have to put down. For example, I've heard that they were asking, what was it, the hard money loans were only asking like 5% down, which seems crazy. Now it's phenomenally higher than that as they see the risk. So a couple of things that happen when things are going well, they not only lower the interest rate, but they lower the amount of down payment. And when things are going the other direction, like now, they not only have a higher interest rate, but a higher down payment required. Here's a calculation I make, which I call the real mortgage payment price index. So if interest rates go down, that doesn't affect all of your mortgage payment. One, did you put money down? Obviously, the lower interest rates doesn't affect if you the amount that you're putting down as a down payment. And also a lot of your mortgage, your real mortgage payment isn't just principal and interest. It's also taxes and insurance. So I'm just saying that 80% here is of your mortgage payment, your actual mortgage payment is principal and interest. So it gives you a ballpark idea. So if we look for nationally at 130 is what it is now. What was it back at the peak back then? Oh, less than 130. So the real mortgage payment price index is higher now at the peak. And if you want, you can look at individual. Let's look at Phoenix. Oh, I can change it here to just make it easier to see for Phoenix. So Phoenix isn't quite as we're at 165 now, so we're only back to like the fall of 2005. Uh, Here's another way to look at that data for example, just Phoenix. You can choose your metro here, and here's the cash price of the index. Here's when I adjust it for inflation, this gray one, and then when I take into account mortgage payments, that's the red one. But like I said at the beginning, this Case-Shiller data is old. We can see what's happening now when we're looking at, like in Phoenix, the MLS, that it looks like prices are peaking now in June. suggested this a couple of months ago, or expected this a couple of months ago, which is kind of a radical idea 2 months ago, but now it's looking pretty certain, at least to me, that prices are peaking right now for this cycle. If you had a house, an investment house you were thinking of selling at the top, you might have missed the top.